Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, another down day. Boy, I tell you, we are racking them up. The question is, did we get a dead cat bounce or, we're down like 4% on the Nasdaq. So it is looking pretty bad. But I have some things in store that might be a little bit better on this. We have two very nice bear put spreads that I put on, and we'll take a look at those in just a sec. Just wanted to kind of bring you up to date on the market. The market is in correction, so it is time to take some profits if you got them. Go to cash if possible. Really, it's really important to be in cash. I'm about 90% in cash. Actually, I do have some things, but mostly in cash right now. You want to build your watch list, because when you build your watch list, when it turns around, when we get that follow through day, you are going to get another bite of the apple. So right now, just take those profits, go to cash if possible, build your watch list, and get ready to short. And as a matter of fact, I'm starting to short right now. I have two stocks that I've shorted. It's not a traditional short where we borrow the shares and then sell them, though if the market continues to move down, we may be doing that. These are bear put shorts, bear put spreads that short the market. And they're a little bit safer than doing a short, just an all-in short. So we will take a look at those in just a second. I have a nice little trade today, and that's on Boeing. Boeing kind of missed its numbers, unfortunately. Unfortunate for the people at Boeing. And it looks like the price of the shares are going down. Now, I did enter the trade a little bit early, and I did put a video out on this one. But we did enter that trade a little bit early. At the end of the day, we did have Boeing did trade up a little bit to 154.46. But overall today, Boeing was down $12.58, or about 7.5%. Now, we do expect a dead cat bounce on that. It will pull up a little bit, and then probably it will pull back down. So here's what we did today. We bought a June 3rd 155 put, and then we simultaneously sold that June 3rd 145 put. So the width of the spread is 10 points, 155 to 145. So as the stock moves down, the value of the 155 put should increase in value. Now, currently, we're right at the sort of the top. We're at 154. So that if the stock falls, then we will see a profit. According to my calculations, when we did this spread, the stock would have to fall would have to fall to below right about 145 to make all the money, and that's $565 on a investment of $435. So from when we did the spread till now, it's gone up a little bit, but we anticipated it adjusting back to the line that you can see here, and hopefully we'll go down a little bit more. But I definitely think that is the case that we're going to see on Boeing. Let's take a look at the live chart on Boeing, just to kind of show you what we're up against here. And that is basically that Boeing, as you can see, just took a swan dive today. Lots of selling on this news. Boeing is going to kind of be in this structural difficulty where they're going to have a lot of trouble delivering. So basically, I do expect it to move down lower. Let's look at the kind of go at the weekly chart so you can see kind of what we're dealing with here. Right now, we're going to probably get some support right about here. That's why I'm expecting that's why I'm expecting it to move down further to about that 145 level. So if it moves down to 145 before or on or before June 3rd, we will make all the money. And in this case, the money is $535. So kind of a nice little trade. and you might be interested. I still think that, depending on how it goes tomorrow, you definitely could enter that trade. I am long only on 3 stocks right now. Can you believe it? Everything else has been everything else has been sold out. I mean, everything else has been stopped out. Remember, I don't try to let any stock move down on me more than 7%, but I do have 3 stocks left. They're American Homes for Rent. This is a REIT. It's just down about 12 cents today. And Rexford Industrial Realty. This is another REIT, down about 2 cents. And one of the stocks that did buck the trend was Novo Nordisk. I want to show you that. Let's look at a live chart on that one. NVO, of course, is the symbol for Novo Nordisk. And this company makes most of the insulin in the world. They're a world leader in insulin production. So even if we have a lot of downturns in the market, I do expect this to trade up. It's traded down to the 21-day line. Hopefully we'll get a nice bounce there, and it will start to move up. But it's off a little bit in the after hours, so who knows? I may be stopped out of this one as well. Currently, on this one, my stop loss is at 109.50, and we're currently at 109.93. So hopefully we'll get a bounce here tomorrow. It's kind of looking that way, and then hopefully it'll move back up. But I'm not going to take a lot of loss on it. My stop on this one is at 109.50, and currently we're at 109.93. So we're pretty darn close in the after hour trading. Well, so we'll see what happens with this one. But I'm mostly short, and I'm starting to do some of these bear trades. Now, if you were with us, yesterday, I showed a bear put spread that we did on Disney, and that's up about $80 from where we entered it at about $330 out of our pockets to current value at about $410. So let's take a look at Disney on the live stream to see kind of what the patterns look like there. I'm going to go over to the daily chart to kind of show you this. Disney disappointed, but is up after hours. So, we're going to see a bit of a dead cat bounce here. Disney did disappoint on the earnings, but after hours it's up to 116.70. So, we will. It closed at 115. That was off, basically. And I do think we're going to get a little bit of a bounce here. Very likely to get a bounce. The bear put spread, we entered the bear put spread basically right about here, as you can see, right about 118. So we're definitely going in the right direction on this one. We are going to come into earnings in 14 days. I do expect that we probably will be down on earnings. That would be my guess. And if that is the case, then this will hopefully give us some more juice here. The potential return on this one, and I should put this down on the next slide when I do this tomorrow. The potential returns of in about the $630 range on that one. So hopefully a good trade, hopefully a good trade there on that. So without further ado, let's get to your questions. Thank you for holding on here, and let's get going as we speak. All right, Josh, thank you very much for the question. Let's look at Meta. And of course, that is a Facebook. This trades under FB is the symbol. Now, Facebook did trade up today on good earnings. So, interesting. It's an interesting response to probably the Twitter news of yesterday of the Elon Musk purchase on Twitter. We're up strongly after hours to 205. So it looks like we got a dead cat bounce here. This is a dead cat bounce where it comes down and then boom, and then it moves back up. But one thing I want to point out here on this is that we did, even with this upward motion, when things are going down, that's when the dead cat bounce happens. It'll go down and then it will trade up, and I definitely think that's the case here. I think we have a dead cat bounce on Facebook. This may be a good short, by the way. Let's take a look at let's look at the 10-minute chart here. Yeah, we did have, it has been in this downward trend. We did get a little bit of buying at the end. So the question is how it trades tomorrow. We will see. But my guess is I would not be a buyer of Meta, not when it is in this trend. What I would look to do possibly is if it does trade up to the 21-day line, that's where I would short it, either using a bear put spread or doing a direct short using just borrowing shares and then selling them. Currently, we're about 13% below that 21-day line. If this trades up to the 21-day line, when it gets in with about 5% of that 21-day line, that's a place that you might want to look to short it. I'm convinced that we are going to see some weakness in Meta, but right now we had a good earnings report. There's a dead cat bounce on it, so this is right now you just want to kind of watch it. You do want to sit back and watch this because you might get a situation where it will. I don't think it's going to reverse, but I definitely think it's going to pull up, and then just like with the dead cat bounces, it's going to move lower. So let's get it. Let's take a look at Home Depot HD, and this was such a great performer, but this also has really some issues with all this inflation. Home Depot probably isn't going to be as strong on its numbers. Now we have earnings basically in 20 days. The earnings on a Home Depot are going to be on the 17th of May. Now, Home Depot has been a very good performer, as you can see. That it's moved up on its sales 16%, 11%, and the profits have moved up as well. But if Home Depot misses here, and I don't expect they will, but there's a lot of inflation, we could see weakness here. Would I buy this thing? No, I wouldn't. And why? Because first of all, we're in a correction. That's one of the main things. The market in general is in a correction, but we also have a downward trend, and we're trading below that very critical 200-day moving average. So I probably would not be a buyer of Home Depot. Now, if I owned Home Depot, then I might be more inclined to hold it, but not. I wouldn't hold. I probably would not initiate a new position at Home Depot. So that's kind of my point, is that right now your best bet, if you're long, might be to just go to cash and wait for the market conditions to improve. I'm mostly cash in my portfolios right now, and basically what I'm looking for is that follow-through day to happen, and when that happens, then I'll come back in using my watch list. But right now, I'm pretty much all cash, except for these bear put spread trades that I'm doing after earnings. When basically a major company is missing, that's where I'm looking to put a bear trade on. If you'll notice, both Boeing and and Disney missed. So that's kind of what I'm looking to do there. All right, let's take a question from TikTok. Thank you for holding on here. It's by the way, if you're watching on TikTok, you can get the whole feed with the charts. Just go to www.Dallas Trading Floor, or just go to my profile, click on the link, and we have a live. We have the live YouTube feed where you can see what's going on. All right, let's take a look. Okay, hello, hey, thanks, Soft Profit Gainer. I like that. Let's see, followed your live host. Okay, dead cat bounce. What is a dead cat bounce? Well, what a dead cat bounce is when the stock, when the market or a stock is in a downward trend, and then it comes down to a bottom, and then it jumps up and then moves down very quickly. That's a dead cat bounce. So it's kind of like, imagine having a dead cat and throwing it on the floor and having it bounce. That's kind of what it is, and that's kind of what it looks like. I do think that Facebook may be encountering that, though Facebook did have good numbers. So, we don't know necessarily if that is the case, but definitely the situation that is a dead cat bounce. All right, let's take a question from Josh. FCX, and that is Freeport McMoran. This is in a good area, which is the metals and mining. This has been one of the few areas that has done well in this market. Part of the reason is because of the inflation. We are seeing renewed interest in some of those material stocks, some of those cyclical stocks like Freeport McMoran. And this is one of the biggest miners out there. So let's take a look at it kind of on the weekly chart. I'm starting with the weekly chart. We did have a little bit of a bounce after hours. Not really a bad dead cat bounce, but a little bit of a bounce. As you can see, their sales have been going up. This is primarily due to the increase in the price of copper. Freeport McMoran is one of the largest copper miners in the world, and the price of copper makes a big difference. But as you can see, we just had earnings, and there was a drop down to that 200-day line. So it's starting. We're starting to get a little bit long in the tooth in some of these mining names. So let's see if there's an entry point. If you're not already in this one, it's probably, well, I don't know. We might see about, yeah, it looks like we have a bounce off that 200-day line, and it moved up. So, we might be able to possibly move into a position here. They had good earnings, and there's definitely demand for what they have, and that's copper. Their profits were up 110%. Wow, that's really good. That's the first quarter, and their sales were up 36%. So they're really doing very, very well. The question is, can you buy them here? Well, maybe, because it does look like we might have gotten a bounce off that 200-day line, and that is a secondary buy point. As you can see, it's come along here, and then it's bounced off that 200-day line twice. So this would be like the third bounce off, and it did look like it moved higher. It went down, it bounced, and then it pulled up, but then it pulled right down to this level of resistance. So right now, resistance for Freeport McMoran is about at 43. Here's the thing, this is potentially a reversal. I do agree with you, Josh. This is potentially a reversal. And I do think, though, it needs to move above about 43 to really complete that reversal. See how this trades tomorrow. I would watch this one. If it closes above 43, then I think you might be in a situation where where you're going to get a support. So I would wait for a close above 43, and that's kind of where I would do it. I would wait for this close above about 43 on this one, but currently I am very, very light. Again, I'm not really adding to any of my long positions. I'm just waiting for potential shorts to come my way, and that's what I'm sort of doing. That's sort of how I'm handling it right now. So I probably personally would not be a buyer here, but it does look like it is a potential reversal. So very good. Hey, Jim, where do you put your stop loss percent-wise in a spread trade, just as it goes opposite? Very good question. Very good trade. Thank you, Sarah, so very much. Oh, from Honolulu. Wow, that's great. Thanks for watching me from Honolulu. So appreciate it. Where would you put your stop? Good question. Here's what I do is I look to see where the potential, where the potential break even point, and I put an alert there. So let me go ahead and see if I can jump on over to the jump on over to the to the trade. So let me see if I can share that out really quickly here. And what I'm doing here, I'm going to go over here and see if I can share out this screen. See if it'll let me. Okay, bring it up here. Hold on. And this is going to be Disney. Okay, there's the bear put spread on Disney. So let me kind of show you how that sort of is working. All right, so let's share that screen first. All right, basically what's happening here is that when we look at how the trade works, I haven't updated this one for today, but we want to be setting our alert. We want an alert on this one, basically when we reach the break even. Currently the break even is at 113, but we're early in the trade. So here's what I would do on this one. I would set an alert on that. So let's see let's see where it closed today. Let me just see where Disney closed. I don't know what I'm doing. I'm just getting the price, the exact price where Disney closed today. So basically what we want to do is if it moves above about 115, that's where we want to be potentially closing the trade. And one of the things, if you have access to this, and I'll show you this on the chart, if you have access to my slides, I'm going to show you this little trick here. If you have access to my slides, at the bottom of the dashboard slide, I have a little link here, and I don't know if I can. Yeah, I have a little link there, and that link moves it over to a calculator, the options profit calculator. And what I can do is if I want to take a look to see kind of, where I can close it, what I'll do is I'll put this in, and then I'll look at the chart, and then I'll go to the day. For instance, today is the 27th, so I'll go right down here and look to see kind of where it closed today. Well, according to what I have, it closed right at about 118. Let me just make sure that I have. Let me just show you where it closed today. So this is a little bit of a rigmarole calculation, but you'll get the hang of it if you do it a few times. It's not that hard. It's a number of steps that you have to do. So what I'm doing is I'm going to look for the closing price of I'm going to look for the closing price of let's go right back here to oops. Should be showing that, right? No. Oh, goodness gracious. There we go. Okay. Look at let me pull up another screen here that's a little easier to use. Boeing. There we go. All right. A lot of rigmarole there. So let me show you that as well. So here's the chart that we're looking at in terms of the bear put spread on Disney. Currently, it's 427 here, and the price of Disney it was up a little bit today is 116. So that would be currently right about here, right about here. Now, if we were to close this today, I don't recommend it. We would close it, and we would suffer an $8 loss here. So we probably don't want to do that. So here's what I would do. I would set an alert, basically, and I do have an alert set right about here at about 118 right here. And as you can see, as it moves forward, we're going to move that stop loss down, that alert down. And so we want to make sure that it stays in this track as it's moving, as it's moving lower. Now, there's a number of ways to do that, but I find that the easiest thing to do is if you have charting software that allows you to set an alert, that's what I would do. Or you can just check at the end of the day on Yahoo to see, and I think they allow alerts on Yahoo as well. You want to close out this position if it is moved below about 118. So that's kind of where you want to potentially alert, and then you would close it out. So as long as it stays in the 116 range and it moves lower, I think you'll be fine on this trade, and hopefully you'll make some money on it. Definitely, that has been the case up until now. I'm just going to update it here a little bit. I think we've made about $80 on it so far in the last 2 days or so. So that is looking pretty good. All right, so pull back to the. Let me pull back to the charts here. There we go. The Market Smith. Relaunch those charts. There we go. There. Okay. Now we're back with the charts, and we're looking for something to look at from here. All right. So let's to the next question. Thank you so much. And so that's kind of what I would do there. That's what I would do there. And thank you, Sarah, very, very much. So basically what the stop loss I would have on this one is as if it moves above about 118. That's where I would be considering getting out of it. All right. Matt is talking about a bear spread on GE. Not a bad place, not a bad stock to look at for that. But let's take a look at GE. Boy, oh boy, oh boy. It looks like they had after hours. Yeah, look at that. Wow. A spectacular drop in terms of that one as well. This could be a very good. Thank you very much for this. This is a good. Yeah, it looks like they had a miss here on their GE had a miss after hours. So they were zero, so they were flat. No change in sales. But the earnings are up 85%. So the question is, this is sort of a neutral trade. Let me just see if I can. Yeah, okay, and it sold off pretty strong. What I would do is I would wait for this one to trade up a little bit. It's trading up a little bit, and then when it moves up and then it reverses, that's where you want to short it. But I definitely think this is a candidate for it. I want to look at a few more things here. What I like about this one is it's a fairly large stock, so it's very liquid. So you're going to get the options that are priced very effectively. I mean, very close. The problem when you have these smaller issues is that the options don't reflect the real cost. But on a company that has as many shares outstanding, that's not going to be the case here. So I definitely like that. Currently, we are 12% below the 21-day average. That's interesting. So here's what I would do. I would wait for this to trade up a little bit. I think it's probably going to trade up tomorrow. And then if it reverses lower, that's where you want to short it. But definitely, this could be a bear put spread, GE bear put spread. So I definitely think this one's looking very good on that. I really appreciate that suggestion there, because I think that's potentially a really good deal. All right, Jim, Tesla stock split leaked rumor to be 120 from JP Morgan. That's interesting. Once they've approved the shares, can we enter? I would wait on it, but I think that is going to be a great opportunity, but I would not on Tesla here. I would be very careful. I would, because of the down market. I love Tesla. I'll be honest with you. I think it's one of the most innovative companies out there, but I'm not so sure that it can hang on. It's fallen below 1,000, and that was a key level of support. And right now, it's at the 200-day moving average. Part of the reason why we're seeing the Nasdaq down so much is because of two issues, and that being Apple and Tesla. They've been selling off, so I would be careful here. I would wait. I think you possibly could start looking at buying if we bottom at about 800, which we might. But looking at this relative strength line pointing down, we're definitely going to be going down some more. So I would be really careful about this. I think you just got to watch this at this point. I know there's such a FOMO of thinking, wow, I could buy a Tesla for 800, but don't give in to the FOMO. Basically, we got to wait, unfortunately, now with Tesla until Cathie Wood starts selling, and she might. And when she starts selling, that's when we're going to dive in back. That's when we're going to get back in. Unfortunately, Cathie Woods hasn't been hurt enough, and when she is hurt more, and she starts selling, and she's going to have to, and I want to look at the ARK funds. That's when we want to start looking to acquire some more. Some more Tesla. This is the ARK funds right now. As you can see, it's an absolutely horrible chart. It's just going down, down, down. Relative strength is 10, $48. I mean, this thing eventually is gonna turn, but maybe not for a while. So, I think we just got to wait and just watch it, and that is hard to do with something like Tesla. It really is. All right. Okay. How low can Teladoc fall? Boy, I don't know. TDoc. I love TDoc. 2 years ago, I was definitely in it. But I think it could go. Here's the thing. Here's the thing. And let's go back to the monthly chart. As hard as this sounds to believe, stocks can continue to move down. If you look at this chart, if you look at this chart here, I mean, we could literally easily, very, very easily get to 16 on this, 35 on this one. And if it blows below that, it's likely to go down to 12. Okay. So just because it's been a high flyer in the past doesn't mean that it can't give up all of its gains. The problem with Teladoc and the problem with the area that it's in is that it doesn't have much of a moat. I mean, once telemedicine gets going, everybody's going to do it, and it just doesn't have as much of a defendable moat. Initially, it was great, but I think that it's going to be tough for Teladoc. So I think it could go a lot lower. I think it could go at least to 35. If it falls below 35, then I think we're taking a huge risk. Let's take a look at Zim, and that one. This has been a great performer, but it has just like everything else in the market right now. It's just it's been tough for Zim. It does look kind of like it's forming a reversal here. It didn't come all the way down to the 200-day line. That's very, very good, because the fact that it didn't come all the way down to that 200-day line says that there's some strength there. And this is definitely top performing in the ocean transportation. This is a very good group still, being at 19 out of 197. So this is one of the top groups in the market. So has it reversed? Well, I think it might. If it can move above that 21-day line, that's where you want to start possibly buying it. I'm not buying it right now just because of the overall market conditions, but the 21-day line for Zim is at 58.73. We're at 57.10 after hours, so we're very close to that 21-day line. If it can come up to the 21-day line and hold it, then we might start a small position. But right now, it's just a tough way to get in there. Just tough. Thoughts on Facebook are flying high. Well, you know what? I think that sounds great, but I think it's a dead cat bounce. So I'd be very careful buying Facebook here. I think it could reverse on people very, very easily. I think it's a dead cat bounce. I should have the opposite of what Jim Cramer says. Absolutely. Oh yeah. Okay. Yeah. Well, see, that's the thing about Jim Cramer. Jim Cramer's job. Jim Cramer works for CNBC, and they have lots of big advertisers with lots of money, and it's basically his job to hype stocks. Now, one thing you got to know about Jim Cramer is right before the meltdown in 2008 with Lehman Brothers, he was saying buy. So be careful with him, because right now they're touting Facebook, but Facebook could be under a lot of pressure. Netflix, look at Netflix. Netflix was seeming invincible just a very short time ago, and now not so much. This is the chart of Facebook. I would not be buying this chart. I'd be potentially shorting this chart, absolutely potentially shorting this chart. As you can see, it pulled all the way down and then pulled up to that 50-day line, and then it's lost its way here. I think this is a potential short, but today it's traded up after hours. It sort of missed a bullet, but it didn't trade up all that much. Now, in after hours it did, but it just didn't trade up all that much. So I think this one's a potential short. I'm not shorting it now. I'm waiting. I'm going to wait until it trades up. But if it does dead cat bounce like I think it's going to, then I think it could be a short. All right, let's look at Apple. And Apple has been, this is the bellwether of all bellwether tech stocks. This is where the Nasdaq is, and this is why the Nasdaq is so damaged right now. You'll notice that it has violated the 200-day line. You see, it's done it. It did it once back here in March, and then it's done it again. So if we look at the weekly chart on Apple, we're going to see it's violated. It's violated the 200-day line. Now, if it reverses and moves higher, we're okay. But if it does not hold here, if it moves below this consolidation at 182, if it moves below, let's see, let's get the exact price on it. If it moves below the bottom of that consolidation, that's where the resistance is at about 150. If it moves and holds below 150, it's going lower. It's going to go lower. Currently, it's in an upward trend. Currently, Apple is an upward trend. So I'm not a buyer of Apple at this price, but currently it's an upward trend. So if you're owning Apple, it's not the time to sell it. But if it can't hold above 150, that's where you want to start lightening up. So right there, if it can't hold above that, then it's probably going to go lower. But Apple is one of the ultimate bellwethers in the whole stock market. It's widely held by everybody. So there you go. Boyle is hot. GM should have bought it and sold it. Yes, it is, Alberto. It is. The natural gas is it's definitely one of the things that's making it work. I probably should cover more. I should probably cover this more because it's been doing so well. There we go. Definitely had an update today. It spiked, then it bounced off the 21-day line. That's where you want to look for it, and it's got nice movement. So yeah, there's definitely this definitely has momentum to the upside. No question about it. No question about it. Momentum to the upside, and it does look like it's probably going to go. It's probably going to make a higher high. Definitely. Let's look at the weekly chart to see. And yeah. And right now it's at 89. If it can move above this resistance right here, then we're off to the races. It did pierce above there, as you can see. Basically a week ago it was at 110. So this definitely could move higher. There's no question of it. This is an upward trend, and this could definitely move higher. So you probably want to watch this one. I'm probably not a buyer here, but definitely could do that. Sam is asking about the Qs. The Qs are damaged. Now, the QQQ is an ETF that follows the top 100 stocks in the Nasdaq, and it has been very weak as of late. Let's go over the daily chart. This is where all the concern is. It was down about 4% today, which means that very, very large funds are selling the stocks that are in the QQQ. Now, the biggest stocks in the QQQ are Apple, Tesla, Google. I think Google didn't make its number. So that's part of the reason for the weakness in this. Right now, I would be scaling out if you're not already out of this, because if with the Qs, if we're in a correction, you don't want to be in the Qs. You just don't want to be in the Qs. Spider, pretty much the same thing. The SPY, of course, is the ETF that tracks the S&P 500. That's also showing just this massive sell-off. So I do think with the inflation and a lot of other things, these indexes are not escaping it. That's part of the reason I'm going to cash, and I'm staying in cash, and then I'm trying to find selective shorts that I can do on relatively large cap stocks. So that's kind of my take on it for now. All right, let's take a look, and it's probably getting at the end here. Shop. I was trying to put a short on Shopify, and I still am. I'm kind of waiting. I tried to get a fill. I didn't get a fill yesterday on Shopify. I really wanted to short it, and I still want to short it because I just think it's going to go lower. It's just one of those things. It's a high flyer. It's been a good stock, but now it's time for it to sort of move lower. And I do think that it's going to move lower. The question is, can we short it here? I kind of want to wait for it to rally a little bit, but I think that there's a definite short here on Shopify. It has moved up to 425 on the week. Now here's the thing, you want to short it as it's moving up. So as it's moving up and you can't get traction, that's where you want to potentially short it. I did not short this one today, but I am looking to do a bear trade on this one because I do think it is coming up to it's coming up to the 21-day line. It's getting a little bit closer, and I think it will move lower. Now, we're going to have earnings here in 8 days, so there's a little bit of a risk there, but I do think it's going to go lower after earnings. Even though, I think earnings are fairly good, but in this market, you see, the problem with this stock is, and it's a great stock, is that they're losing money, and that is death in this particular market right now. So they lost money in the last quarter. Last 2 quarters, they've been losing money. Now their sales have been going up, but they're losing money. And in this kind of a market, with a PE ratio of 67 and a price up here in this is probably going to go lower. But here's what I would do: I would wait until we get a reversal. So the cat is bouncing up, but and we may soon get it. We may soon get a reversal. And then when it reverses, that's when you want to short it. So this is definitely on my radar screen. If and I want to do this, put out. I'm going to try to figure out how to send out a text alert when I do short these, because I think that this one, Shop, is definitely on my short list to short. Let this move up a little bit. It's up in the after hours. We're probably going to see a dead cat bounce, maybe to 440, and then once it gives up that level, that's where you want to short it. So definitely, Ollie, definitely a good opportunity. All right, let's look at Boeing, and of course, Boeing is one of the ones that I did. That I did do a bear put spread on today. I did move up a little bit after hours. That's kind of, I think, a dead cat bounce move, because it'll come down and it'll come down a little bit too far, and then it will rally up. Let's see if we can get the daily chart. There we go. Let's get the daily chart up here. Thanks, George. Appreciate it. This question, because I did short this one today. Actually, it's not a traditional short. It's a bear put spread, but it essentially shorts for that distance between the distance between the puts of basically 10 points. So this one definitely is going to make a move. It's up a little bit after hours. This is what I'm talking about, the dead cat bounce, the 155 level. Let me see if I can. Let me see if I have the. If I can share the slides on that one. Okay. It's Disney. I think I had it. Let's see if I can This is going to be BA. No, I don't have it. Anyways, I have the little video that I did, but I don't have the slides handy, unfortunately. Oh yeah, I do. What am I talking about? Of course I do, and they're right here. It's my other deck. But let's come back to the Boeing short. When it closed today, it was at 154.46, and that would be showing it here. It's bounced a little bit. It's 155, so it's definitely bounced up. But I do think, based on this chart, we're likely to see it move lower. I'm going to take a look at the 10-minute chart, the intraday chart, and see kind of what is happening here. And so at the end of the day, you know, we were up here at 160. We dropped. This is the big drop. Then we bounced. This is the dead cat bounce right here, line. And then we kind of bounced once, and then we're bouncing again. But I suspect tomorrow it's likely to this. It's like go down. So it's going to go kind of like this. So that's kind of how a dead cat bounce looks. What happens is that it falls, it bounces once, comes down, bounces again, and then goes further down. And that's kind of what I'm seeing here with this particular pattern. So hopefully we'll have another opportunity to enter that tomorrow on Boeing. But I did do the bear put spread on that one. Basically where I entered it, $435 out of my pocket by buying that 155 put and simultaneously selling that 145 put, both on the June 3rd expiry there, for a total of $435 out of pocket. Now, if this thing falls basically to 150, which I definitely think there's a high possibility it will in 30 days, it will go basically fall 5 more points. That's kind of what I'm thinking. And that's pretty conservative, I believe. If it moves down to about 150, and currently it's at 155, then we will make all the money on this one. And I think it's, what is the calculation on this one? Let's take a look. The calculation on this one is 565. So not a bad little, not a bad little potential profit there. All right, we are pretty much out of time. What is a good entry for Google for long-term? Wait until we're in a confirmed uptrend. Currently, we're not. That's the problem in the market. So, you know, for Google, you know, wait for a follow through day. And what do I mean by follow through day? Well, you need to Google this one. Google. You're Googling it, but you need to wait for a follow through day on this one. A follow through day. Right now, the market is in a downtrend, and so we really don't want to be buying anything in a downtrend. You want to wait for that. You want to wait for that uptrend to happen. If you're unfamiliar with what a follow through day is, please look it up by typing it into Google and reading it, because it's really interesting, and it's very time tested. Right now, the market is in correction, so I am not buying anything right now because it's in correction. I'm shorting and I'm keeping what I have, and I'm reducing positions if I have to, but I'm primarily in cash. Even though it looks like a good time to buy, wait for a follow through day. And if you don't know what a follow through day is, the easiest way to find out is to go to Google, type in follow through day, and it will tell you exactly what I'm talking about. Thank you, everybody, so much for taking a look at my show. I try to do this show every day at about 5 o'clock, if everything is going right. About 5 o'clock, and then we go typically for about 45 minutes. If you're not already a member of the Action Trade Alerts, super easy to do. Just go to www.Dallas Trading Floor and a first and last name and an email address, and we'll get you all set up on that. We also have the Discord room, which is also very, very interesting. You can find out more about this, of course, by going to DallasTradingFloor.com and just clicking on the link, and it'll give you a little bit of a description of what we're talking about there as well. So I will be back tomorrow at 5:30. But till then, happy trading.